Good afternoon, everybody, and welcome to Strategy Now here at MarketStream.live. My name is Joseph Cusick with the Cusick Group, securities offered by MoneyBlock, here to wrap up what's going on in the midday, kind of give you some context. And basically, we're seeing a market that's slightly in the red right now into the midday. The major averages have tried to stay pretty close to their flat lines, but have been pulling back a little bit. We're not really seeing any conviction from any of the market participants, either the bulls or bears, especially since we're waiting for a speech from Fed Chair Yellen, and we're basically digesting a mix of earnings reports as well as economic data. So we're going to keep an eye on that. But taking a look at the financials, which have been in the forefront, they've been in the focus for the last couple of days. And we have Goldman Sachs trading down roughly around $2, Citigroup down about 89 cents, and U.S. Bancorp down, actually up about 4 cents right now. Now, they all reported earnings before the bell, and despite the fact that they all reported better than expected earnings, beating estimates, the stock, just like the previous stocks that we've discussed this week, like Morgan Stanley and so forth, they saw some profit taking. Morgan Stanley actually right now is up 33 cents, but it's all off of its worst levels that we saw after they announced. The financial sector, though, is basically lackluster. The reports are basically reflecting that the good news was already priced into the stocks. So it looks like some investors are taking some profits. Taking a look at some of the economic data that we saw that came out, which was the focal point of the morning, was the December CPI report. That was what was leading all of the headlines. And we basically saw, I guess, a rationale of why the Federal Reserve is going to be tightening, and their bias is continuing to be that they're going to tighten at least 3 times. We are seeing a slight uptick in consumer inflation, and so that provides no other reason for the Fed not to do any rate hikes in 2017. Again, we're going to be watching at 3 p.m. Eastern time the comments from Fed Chief Yellen on the goals of the monetary policy, and that could move the markets. Taking a look at the consumer discretionary sector, down about 0.4%. You also are seeing telecom services under pressure, down about 0.3%, and healthcare down 0.3%. The consumer discretionary space basically opened up lower today. You had Target come out, as we reported this morning, down about $4 right now. It's 66 and some change. Lowered their Q4 guidance, basically said that they had disappointing holiday sales. And you're seeing that that's reflected in the space in general. XRT is the ETF that tracks retail. That's down about 0.9% at 43.97. You're also seeing energy under some pressure today. Basically, the space is down about 0.4 point, and you continue to see that oil is to the downside, down about 2% at 51.33. Basically, you can see that the weakness in oil is coming from the fact that you saw year-over-year growth in supplies from OPEC nations. You're also seeing that U.S. producers, the shale producers, are starting to boost output. We could have seen that since we saw the rig counts increasing here in the United States. But basically, the output, now that we're over $50, is increasing. That's going to put pressure on prices because we could have more supply. Speaking of supply, watch tonight. The American Petroleum Institute will be putting out their estimates on supply. And then tomorrow we'll watch the Department of Energy. Taking a look at the fixed income markets right now here in the midday, the Treasuries have basically been trading in a very narrow range following basically some very early losses right off the bat. I think everyone right now in the Treasury markets is waiting to see what Fed Chief Yellen is going to say. The yield curve basically is steepened, where the front end of the curve is holding up a bit better than the back end of the curve. So you're seeing the 2s and the 5 years actually holding up well better than the 10s and the 30s. As a matter of fact, you're seeing that the 10-year benchmark right now is at 2.38%, while the 2-year yield basis is up about 3 basis points at 1.18%. So interesting action. We're seeing yields still increasing and their prices coming off pretty steadily on the curve. So we'll watch that closely, especially as we get closer to the announcement. All right, that's it right now for Strategy Now. As a matter of fact, what we're going to be doing at 3:30 Eastern Time is Tech Talk. And in Tech Talk, we're going to be talking about some names that are going to be having some earnings. Most notable, Netflix. We're also going to talk about Kinder Morgan, as well as Canadian Pacific. We want to see what CP is going to be doing, especially after we saw CSX came down, the shares were down, despite the fact that they were guiding Q1 and fiscal 2017 earnings per share in line. So we'll see if there's going to be some stress in the transports. Till then, have a great day. Otherwise, we'll see you at 3:30 Eastern Time here at MarketStream.live.